Since the last crypto bull market, one of the best applications for blockchain technology has been stablecoins. While the likes of Bitcoin provides a decentralized way to transfer wealth, it's plagued by slow transaction times, high volatility, and high fees. And although you can remove the high fees and slow transaction times by using other cryptocurrencies, volatility in the price is still a problem. And that's why stablecoins have exploded in adoption since 2021. And while there are a few giants in the space, USDT and USDC being two key examples, these are still plagued by centralized problems. There is a growing need for decentralized alternatives to these dominating stablecoins. Now, there have been disastrous consequences for projects that have tried to achieve this in the past, and the biggest example of this has been Terra Luna's UST. But if a protocol can build a secure decentralized alternative, it could become the holy grail of transferring wealth. And it could become something that truly goes head to head, toe to toe with the fiat currency system. So in today's video, I want to dive into the project known as Ethena and see if this is a true contender in the stablecoin space or whether it is another UST disaster waiting to happen. If you found yourself on this video, chances are you're trying to navigate the maze that is the cryptocurrency industry. There are so many signals and noise out there that it can be difficult to filter all of that out and truly identify what you need to be paying attention to. I struggled with it in the past, and that's why I set up the 80/20 crypto newsletter. One free email per week where I dive into the key signals that have happened during the week prior so that we can set ourselves up for the week ahead and also longer term into the future. And we also dive into at least one altcoin per week to try and build out an altcoin shortlist so that you have a list of 4 to 5 altcoins ready to deploy capital into when exchange rates are favorable. So if you are out there trying to navigate this space and are stumbling around and you need a crypto ally, I'll leave a link to the 80/20 newsletter down in the description below. Finally, if you get to the end of the video and you've enjoyed all of the analysis on Ethena and you found value out of it, hit the like button down below. It really helps my channel out, and I would love to have you as a subscriber on the channel. If you don't want to miss out on any future deep dives such as this, then hit the bell notification icon down below too. Now, with all of that out of the way, let's dive into the world of Ethena. So Ethena is the platform behind a yield-bearing stablecoin known as USDE. It was created to solve one problem, and that was the creation of a usable stablecoin that was truly decentralized, which is a great ambition, but it's a pretty tough ask, as we've already covered. So centralized stablecoins are usable. USDT, USDC, they're all usable and are solid because they're backed by traditional assets. However, those assets come with the same problems of traditional banking rails. And then on the other side of the arena, we have these decentralized cryptocurrencies that can be used as collateral, but we saw how badly that can go wrong with the downward spiral of Terra Luna's UST saga in 2022. So Ethena has created or tried to create a stablecoin that tries to take the best of both options while also removing the disadvantages of both. Now, diving into how does Ethena do this? There's a lot to cover with Ethena, so please grab a drink and let's get stuck into this. So to achieve this impossible middle ground, Ethena uniquely uses cryptocurrency collateral to ensure its stablecoin USDE holds its US dollar value, so it remains pegged to the US dollar. And the first aspect of this system involves shorting futures contracts using cryptocurrency collateral. So by shorting futures contracts of the same cryptocurrency, so for example, if you open short positions on BTC USD using Bitcoin BTC as collateral, it means that the total USD value of that collateral, of the futures contract and the underlying BTC remains unchanged. So if the price of BTC increases by $1,000, the spot position will increase by $1,000, but then the futures short position will decrease by $1,000. So total in net, the total hasn't changed. Likewise, if the price of BTC decreases by $1,000, the underlying BTC, the spot BTC, will decrease by $1,000, but the futures position will increase by $1,000. Again, meaning that there's been no net change. So this means that regardless of price volatility, the USD value of all of the collateral remains stable. Finally, the reason why Ethena uses these short futures contract positions is because these short contracts are less popular. And because they're less popular, the people that are opening long contracts typically have to pay fees to those opening the other side of those trades, which is the short contract holders. So with Ethena opening so many short contract positions, it is accumulating trading fees. And this is the one half of this image that we can see on the screen here. So the derivatives, the short futures, this basis arbitrage, That is what's going on with the one half of the collateral sitting behind the USDE stablecoin. So these are short positions that are generating trading fees while ensuring that the collateral behind them doesn't change. Then on the other side of this image, we have collateral. So this is the spot collateral that's sitting behind these short derivative positions. But some of this collateral is also made up of staked tokens. And that means that staking rewards are also fed back to USD holders. So USD holders have both fees coming from trading fees, this from the short futures contract positions, and also staking tokens, and both of those returns are being fed back to the USDE holders. Now, if we dive onto Ethena's transparency page, we can see the makeup of all that collateral, and we have Bitcoin sitting at 60% so far, Ethereum sitting at 21%, Ethereum liquid staking tokens at 12%, and we have a bar ready and waiting for Sol. So apparently Solana, Sol tokens are going to be added into Ethena's collateral in the near future. And then finally at the bottom, we also have liquid stables making up 7% of the collateral sitting behind Ethena's USDE. Okay, so that was a little bit about USDE and the collateral sitting behind the coin and how it remains stable while generating an APY. But the next stage then is about how it maintains its peg to the dollar. So how does it maintain its peg one-to-one with the US dollar? And this is another key difference of Ethena. So for Ethena's USDE stablecoin, it can only be maintained by KYC approved institutions. So if the demand for USDE increases and the price of the USDE stablecoin then moves above $1 because of that increasing demand, the institutions, these KYC approved institutions, are the only ones that are incentivized to then mint extra USDE through the Ethena platform and then sell that USDE for another US dollar stablecoin such as USDT, therefore introducing selling pressure into the market and bringing that peg back to $1. Likewise, if demand for USDE falls and it drops below the $1 peg, the same institutions are then incentivized to buy USDE on the open market and therefore introduce buying pressure to bring that peg back up. So that was a lot, but the TLDR, the too long didn't read summary, is that USDE collateral is made up of cryptocurrency collateral and also short futures positions. And its peg is maintained by KYC approved institutions. And then the holders of USDE can earn a yield from both trading fees and staking rewards. Now, Ethena started its days after the collapse of Terra Luna's UST stablecoin. And Arthur Hayes, the former CEO of BitMEX, posted a white paper for a stablecoin that was resistant to this market volatility that a lot of stablecoins, or decentralized stablecoins that are backed by decentralized collateral, suffer from. And then Guy Young, an investment manager, then offered to build this stablecoin shortly after, and therefore Ethena was born. So Ethena Labs, which is a software company based in Portugal, was established in 2023 to oversee the protocol's development. And that raised 3.6 million for the project in 2023. And then a further 14 million was raised earlier this year in 2024. And then the USDE stablecoin was then launched in February of this year. So it hasn't been around for a long time. That was then closely followed by the launch of Ethena's native token, which is ENA. So ENA is the native token of Ethena, and it has two main use cases within the protocol. The first is for governance, as we can see here. So it enables ENA holders to vote on new Ethena proposals and therefore influence the direction of Ethena's development. And then secondly, ENA holders can access increased yield and staking rewards on the Ethena platform. Now, swiftly getting on to ENA's tokenomics. The price of ENA currently stands at 54 cents. And the market cap currently stands at 1.54 billion, which places it in the large cap category of altcoins. Out of a total supply of 15 billion ENA, 2.84 billion are currently in circulation. Then in terms of allocation of the ENA token, when ENA was generated earlier this year, 30% of the tokens were awarded to the ecosystem development, 30% of the tokens were allocated to core contributors, 25% of the tokens were allocated to investors, and 15% were allocated to the foundation. And now we come to the part of the video where we need to weigh up the pros and cons, the risks and upsides to Ethena and the ENA token. What are the things that can drive the demand for ENA and therefore cause the price of ENA to increase in the future? But equally, what are the things that could strip away that demand or overinflate supply so that the price of Ethena might fall in the future? These are the things that we always need to weigh up before diving into an investment into one of these altcoins. And the first thing to note is that despite its young age, like this is a really young stablecoin, the adoption of USDE has been extremely strong. So in just a short space of time, it has become the fourth largest US dollar stablecoin in the market, sitting just behind the DAI stablecoin and just ahead of First Digital's USD. And its TVL has increased from 100 million back at the start of 2024 to $3 billion as of today. The coin has also received institutional adoption. So USDE has already been adopted by Bybit, and that's one of the largest exchanges in the world. So if the adoption by exchanges continues, this could place increasing demand on the ENA token. Now, another thing to point out is that some of the most successful cryptocurrency projects generate the biggest revenues, and Ethena is well on track to join this field, with its yields being generated from the trading fees of short contract positions and also its state collateral positions. It is currently outpacing most other DeFi protocols and also some layer ones, including Solana. And we can see here on Token Terminal that over the last month, we have had days that have included fees generated over $7 million, 6.8 million. We've dropped to 4.2, but on average, it is above, I would say at least above 2 million on average, if not $3 million worth of fees each and every day. Now, although the market cap of Ethena is well above $1 billion, we're on 1.55 billion at the moment. Terra's Luna token, which is likely one of the best comparisons that we have, despite its downfall, it is likely one of the best comparisons we have, reached a market peak of $40 billion in market cap. Now, that's a 30x from current prices. And so the demand and popularity of decentralized stablecoins can muster extremely impressive results if this is truly adopted as much as Terra Luna's UST stablecoin was back in 2021. So the demand for these things is truly impressive, and if that continues into the future, it's going to put extra demand on the ENA native token. Now, those were some of the upsides. Now let's take a look at what some of the risks are with regard to Ethena's ecosystem. And sticking with the theme of Terra Luna, there is a big shadow hanging over the decentralized stablecoin market, and that is, of course, Terra Luna's USD crash. With such complex mechanics behind Ethena, there's a lot going on here. It could mean that for the average investor that takes a look at Ethena and decides whether or not to invest in ENA, it could be just looked at by an average investor as another Terra Luna knockoff, which could vastly limit the demand for the ENA token if that becomes the case. Then secondly, as a protocol built using smart contracts and collateral, Ethena openly admits that there are several key risks for end users who use this platform, which means that there are also key risks for investors. So these include smart contract risk, reliance on external platforms, a liquidity risk, custodial operational risks, exchange counterparty risks, and also market risks. So there's no denying that Ethena is a very clever solution, but it is heavily reliant on smart contracts that can contain bugs, they can be hacked, and also it's heavily reliant on external third parties that Ethena can't control. Think of all of the short positions that are held on all of these different exchanges that Ethena is using in the background. Now, thirdly, we have to talk about token unlocks, because Ethena and ENA have some token unlocks on the horizon, and they are approaching really fast. So the majority of token unlocks for ENA are yet to happen, and starting in January of 2025, there is a significant uptick in the number of ENA that are going to be unlocked on a monthly basis. So while inflation is okay at the moment, unlocks are about to increase very shortly, and we can see this on the chart here. Despite not having the data, we can see this massive cliff unlock, which is going to happen early next year. So that is something to bear in mind if you are planning on holding ENA into the start of 2025. And then finally, the last thing I want to talk about in terms of the risks is price action for the ENA token. Price action for ENA has not been strong, and it has only recently started to uptick as a result of the breakout of Bitcoin. We've had Bitcoin all-time highs very recently, and therefore we've seen a lot of upticks in altcoin projects. But outside of that, there has not been a massive amount of buying appetite for the ENA coin. So after launching at approximately 65 cents, the token has moved steadily lower, reaching a bottom around the 20 cents mark in September of this year. So it would be good. We've started to see a little climb out of that trend, It would be good to see that confirmed by a couple of higher highs and higher lows on the weekly time frame. And if that becomes the case, and therefore it would suggest a change in trend, then if you're interested in ENA, that would be potentially the time to enter. And that is everything I have to share with you on Ethena and the ENA token. It is undoubtedly one of the most promising decentralized stablecoin providers that is breaking into the market. It has done remarkably well over the last 8 months since it was launched, but there are still inherent risks from the days of Terra Luna's UST. And Ethena definitely seems to have come up with a formula that seems to remove all of those disadvantages that came with Terra's UST. But is that enough to encourage the average investor to invest in the ENA token and take demand for that higher so that it increases the price and therefore returns a good investment for you? So the big question is, should ENA make it onto an altcoin shortlist? Does this provide a better investment potential than all of the other altcoins out there today? I share my own personal view as to whether altcoins like this should make it onto an altcoin shortlist or not inside my 80/20 newsletter. So that is the place to head to if you want my own personal insights on whether these should make it onto an altcoin shortlist or not. As I mentioned at the start of the video, I'll leave a link to that in the description below. As always, the key thing to remember here is that crypto is not a get-rich-quick scheme. It should be considered alongside a variety of other assets. Please don't put your eggs into just one basket, and always do your own research too. Never trust anyone on the internet. I am just a random guy posting videos on the internet. You should always do your own research and find things out for yourself. With all of that being said, I hope you have enjoyed the video and it's formed a basis from which you can move forward and start researching Ethena for yourself. So thank you so much for watching this video. I will see you in the next one.